Hi friends, myself Subrata Mukherjee and you are watching my channel Dr. Subrata Mukherjee Distance Learning in Commerce. Today I am going to discuss another problem on depreciation accounting. This is lecture number 16 and you can find the other lectures on the chapter in the playlist section of the channel. I would like to request all the viewers to subscribe the channel and to browse the playlist section of the channel where I have uploaded lectures on accounts, costing, financial management and management accounting earlier. A machine which originally cost and stand in the book on 1st January 2002 at rupees 15,000 is sold for rupees 7,000 on 30th June 2002. Rupees 6,000 was set aside by the firm for the depreciation of the machine up to 31st December 2001. On 1st July 2002, a new machine is purchased for rupees 20,000. The firm closes its books on 31st December every year and provides for depreciation at the rate of 10% per annum on the original cost of machinery. So, ledger accounts. So, first we will prepare a small working to calculate the amount of depreciation. So, before that, so 2 points you need to remember when you get a problem on depreciation. So, the first point is regarding the accounting period. So here the accounting period is the calendar year, that is from 1st January to 31st December, and the method of charging depreciation was the straight line method, because it is given in the question that depreciation is charged at the rate of 10% on the original cost. So on 1st January 2002, the written down value of the machine was rupees 9,000, because 15,000 is the original cost of machine and 6,000 is the amount of provision for depreciation. So the provision for depreciation, I have reduced this amount from the original cost to arrive at the written down value of the machine. Now it is given on 30th June 2002 this machine was sold out. So you need to charge depreciation on this machine for 6 months from 1st January to 30th June. So 15,000 into 10% into 6 by 12. So you will get 750 as depreciation on the machine that was sold on 30th June 2002. So the written down value is 8,250 and the machine was disposed for rupees 7,000. So 1,250 is the amount of loss incurred on the sale of this machinery. Now it is given that on 1st July 2002, another machine was purchased for rupees 20,000. There were no more transactions. So on 31st December 2002, we are going to charge depreciation at the rate of 10%. So you will get 1,000 as the amount of depreciation, because depreciation will be charged for 6 months. So the written down value of the machine will be 19,000 on 1st January 2003. So this is the working that I have prepared. Please have a look at it. Now we will prepare the 3 ledgers: the machinery account, the machinery disposal account and the provision for depreciation. So I have prepared the structure of the 3 ledgers: machinery account, machinery disposal account and the provision for depreciation account. So on 1st January 2002, the original cost of machine was rupees 15,000. Now on 30th June 2002, this machine was disposed of. So you have to pass a journal entry, that is machinery disposal account debit to machinery. So I am writing here by machinery disposal account, and the amount will be 15,000. So in machinery disposal account, I have to transfer this figure and I have to write here to machinery account. So in machinery disposal account, I have written here to machinery account 15,000. So what was the amount of provision for depreciation? It was 6,000 plus 750. This is the amount of depreciation that was charged on the machinery that was disposed of. So I have to write here on 30th June 2002 as by provision for depreciation account, and the amount will be the opening balance of 6,000 plus 750 is the amount of depreciation charged during the year for 6 months. So 6,750. This machine was disposed of for rupees 7,000. So I have to write here as bank account. So bank account debit to machinery disposal account. Amount is 7,000. And the loss that was incurred on the disposal of this machine will be debited to profit and loss account. So 1,250 will be the amount debited to PL account. So this way I completed the machinery disposal account. Now on 1st July 2002, a machine was purchased for rupees 20,000. So in machinery account I can write here as to bank 20,000, and since the account was closed on 31st December 2002, I have to write here as by balance CD 20,000. So this is the balancing figure of the machinery at cost. So this figure is at cost 20,000. So 35,000 is the sum of the debit and the credit side. Now you come to the provision for depreciation account. So what was the balance on 1st January 2002? So the balance in the provision for depreciation account was 6,000. Now up to 30th June 2002, depreciation was charged for rupees 750. So you have to write here PL account, profit and loss account debit to provision for depreciation 750. Now this amount, total amount of 6,750 was transferred to machinery disposal account. So here I have to write here on 30th June 2002 to machinery disposal account $6,750, and on 31st December 2002 depreciation was charged on the second machine that was purchased on 1st July 2002, and the amount of depreciation was 1,000 rupees. So what was the balance in the provision for depreciation account on 31st December 2002? This will be 1,000. So these are the three ledgers that I have prepared here. One is the machinery account, then the machinery disposal account. The third one is the provision for depreciation account. So in the provision for depreciation account, you have to write the opening balance 6,000 as by balance BD on 1st January 2002, rupees 6,000. Then depreciation was charged on the asset that was sold out on 30th June. So I have written here by PL account, by profit and loss account 750. This is the current year depreciation. Now on 30th June that asset was sold out, so I have to transfer this figure of 6,750 to machinery disposal account. So on the debit side of the provision for depreciation account, I have written to machinery disposal account 6,750. Again on 31st December 2002, I have charged depreciation on the new machine that was purchased for 6 months for rupees 1,000, and the balancing figure rupees 1,000 is the balance on provision for depreciation account. Hope all the students have written the question with solution in your notebook, and I have understood the process that I have adopted here to solve the problem on depreciation. In spite of this, if you find any difficulty in understanding, feel free to contact me through email and the contact number given in the description box. Thank you. Thanks for watching the lecture.